Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York on Tuesday, the 7th day of October 2014, and this is the daily report for gold and silver. We have gold, platinum, and palladium trading higher on the day with silver trading lower. First to gold, as you can see, current print on the screen, roughly 12.11. Puts it up about $3 to $4 on the day. We have had a low of 12.0290 and a high of 12.1270. We are currently trading just off the highs of the day. Silver currently trading off about 14 cents, trading above $17 per ounce, but ever so slightly. As you can see, current print on the screen, 17.19, the low 17.13, so it is near the low of the day, high 17.60. More on silver in a little bit. We did issue a buy signal yesterday. We pulled profits on our short position. We did get stopped out. And at the same time, we issued an aggressive buy signal in gold. Traders that took that call in at roughly 12.08 or $2 to $3 below current price point on the long side. Before we go into our current trade and look at some gold charts, I want to pull up a couple of charts. First one is the Standard & Poor's down over $200 on, or 200 points with the Dow Jones Industrial. And here's what I am looking at. We can definitely see a defined channel, and I'm drawing this in very, very roughly, of course, but a defined channel that has been with the S&Ps. This is going back to November 2013, and it tends to really trade within this channel as it has been moving higher. We can certainly see that it's been more aggressive on the upside than the downside. You can see this channel even moves up higher. We've broken through this higher channel, but if we look at this channel here and here in terms of where I would look for some support to possibly come into the equities markets, we're going to look at towards this channel here. This channel, because it is cascading to the upside, probably comes in at around 1920. We'll see if some support comes in, but we have had a series, as this market has moved up, a series of sweeps and shallow retracements. And then, of course, another major influence in the gold market specifically has been the dollar. The U.S. dollar has been absolutely under fire. I absolutely believe it is headed higher, but I currently believe that we have signaled some sort of a correction in this area from this protracted move that really began in July. And in this last half year, we have literally seen the market move from a good stable position, roughly at around 80 on the index, to just shy of 87. So let's get to gold, our current prognosis and our current trade. Of course, aggressive buy signal issued at 12.08. My sense and really my criteria behind making this call was the fact that we really saw a strong bounce off of this now triple bottom that appears roughly at 1180. I think 1184 was our intraday low. You can see on this one candle right in here, we'll go ahead and blow that up in a second, but this candle right in here where you've got this long tail which reaches in the area, but the body doesn't. What that says is that as they drove the market down to those lows, buying came in, some pretty dramatic buying. And then, of course, at that point, we had some real support in the market. And so let me go ahead and blow this up, as I said, so I can illustrate the point that I'm trying to make. And you can see it quite clearly now, in which we have this real long tail that comes in to match this bottom that's been in play now since really the mid part of 2013. And the way that it came off, that really told me that we're probably going to see this market have some sort of a bounce. And my sense is we have no technical evidence that's really pointing towards a bullish turnaround, meaning going from a bear market to a bull market. We've been in a bear market ever since this market's been trading lower, and I really don't perceive that that's going to change. Now, for it to change, we'd have to have a couple of factors come into play. And the first thing is we'd have to take out on a closing basis this low. But I believe by just taking out this low, that isn't significant. We got to start taking out some of these highs. And then that would tell us that we've got a series of higher highs as opposed to now having a series of lower lows and lower highs. So what is our current target for this particular trade. I believe at best it's a short-term trade. My initial target right now is going to be around 12.29 at the high to about 12.54 on the high side of this particular trade. So we're looking for this market to move into a band roughly in this area. So what is my sense right now is that we'll see the market. This is a counter trend to the bear trend, of course. Come up, it will find resistance. I wouldn't be surprised to find it right in this area. And then I believe we're going to track lower. And what's going to be interesting, if in fact this model is how the market unfolds, is what is it going to do when it retests this area? And the reason that that is so critically important, let me go refresh this chart, is taking a look at this historical reference of what we saw last time, in which we had a triple bottom right in here. The market takes off. Many, including myself, thought that signaled the end of this bearish retracement. A lot of us counted an A, a B, and a C in terms of the progression. This was wave one, and I still believe it was wave one, but when it hit this top here, it was truncated. In other words, we had a market, a bull market, which for the first time failed to move to higher highs. And once we did that, we moved back in the channel. Of course, this is the fourth time it tested it, 4 times a charm. And this is where we saw the market really break down, and it broke down from about 1535 to 1180, a considerable move down, and it happened quite rapidly in the period of approximately a month to a month and a half. So I'm not saying that we're going to see the same thing repeat itself. History does repeat itself, but it's much too early to tell. But my sense is this. What we are seeing again is trading within this channel. We've got these series of tops that have really allocated and highlighted our long-standing resistance. We'll get some sort of a move up. I think it's going to be a short-lived move. And I think that we have the possibility then of actually breaking below this dramatically critical line right here, which sits at 1180. And if that comes into play, we've got a bunch of different models to look at, but what it would signal is dramatically lower pricing in gold. So we'll have to see what happens. We've got the equities markets, as I said, under tremendous pressure. We have the dollar trading lower today, and we do have gold slightly higher, with silver off on the day. And traders, this is our current silver chart, and you can see, I think, why I've kind of shied away from silver and the way that it's reacting. We've got the entire precious metals complex trading higher today, with the exception of silver. Now, silver hasn't been really reacting as an industrial metal to the upside as the equities markets moved up, but it certainly seems to be reacting as an industrial metal on the downside as we see pressure in the Standard & Poor's, Dow Jones Industrial, and the equity complex at large. Maintain our current long position in gold. Maintain no position in silver. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.